Equity Mate.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Equity Mate.
Welcome to another special episode of Equity Mates, where we are searching for Australia's next top trader. We're a podcast that breaks down the world of investing from beginning to dividend so that you can hopefully make some returns. My name's Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going, bro?
I'm very good, Bryce. I see that you've reverted back to the old intro today.
I don't want to upset you.
Oh, no, I was hoping for something new.
Okay, I'll take that feedback on board, and for next one, I will try for something new.
Our listeners
isn't as intense as the last one.
Our listeners are out there waiting with bated breath.
So, Ren, we are moving through our competition. We have gone through finding inspiration for your first stock. We have looked at the what's hot, what's not. We have gone through some tips to succeed in a 6-week period, playing the short game. And now we're going to be discussing a bit more of the fundamentals. Stocks versus ETFs, which is a very common phrase and term these days. So what do we mean by that? We're going to delve into the different sorts of, assets that you can buy through stake and in this competition to hopefully win your way to New York, because the investing universe is massive. There's a lot of stuff you can buy out there depending on what your investing thesis is. So we're going to give you a bit of detail about the difference between individual stocks, ETFs, and then let you know what sort of, industries are out there that you can invest in more broadly. So, Ren?
Yeah, and I might slip extra little third area in there, but you can just wait and see.
Oh.
So I like going off script. It keeps you on your toes.
So by the end of this episode, you should be able to identify all the different investing options that are on the stake platform to help you win your way through to New York.
Yeah.
So without further ado, Ren.
Let's start with the most common and probably the most well-known, which is stocks. And really, in a simple sense, each stock that you buy is a share of a company, and that gives you an ownership stake in that company. And then if the company does well and makes a profit, you are entitled to a portion of that profit as an owner. But if the company does poorly, then you wear a portion of that loss. And that is reflected in the movement in the share price. So yeah, the first and the most common one is just buying part of a company, a stock.
Yes. Does every company have the same amount of stock available?
Good question. No. So companies can decide how many shares they want to split themselves up into. I guess, you could have a company with 1 million shares, and then there would be another company with, 1 billion shares. That's why you sometimes get a company like Berkshire Hathaway that has a share price of $300,000, and at other times you get a company where the share price is, $10 a share.
Two things I want to pick up on what you just mentioned there, Ren. The first was when you buy a company or a stock in a company, you become the owner of that company or part owner of that company. And that, I think, is one of the most exciting aspects of investing. It gives us commoners the ability to actually invest in some of the world's biggest and best companies, be part owners in these companies, and profit from, their relentless drive and journey to be the best company that they can be. So I know that that's something that you certainly talk about, Ren, and think is one of the best aspects of buying stocks is, the ability to buy into these awesome companies from, our lounge room chairs.
Yeah, 100%.
And secondly, you mentioned Berkshire Hathaway. For those that are unaware, that's Warren Buffett's investing company, one of the greatest investors and most successful investor in one of the most successful in the world. And his share price, is in the hundreds of thousands. Now, one of the advantages of trading through stake is that they allow you to buy partial shares. So for as little as $10, you can buy a part of that Berkshire Hathaway share, although they don't have the A list, they've only got the B. But for example, Apple, you could buy part of an Apple share and still be an owner. You don't have to have the hundreds of dollars required to buy an Apple share up front. So keep that in mind when you're buying through the competition. It's a minimum $10 trade that you can buy into these awesome companies. All right, Ren, so that brings us to ETFs. What's an ETF?
Yeah, exchange traded fund. Now, in a real simple sense, you buy it like you do a share. So the same process on Stake or on any platform. You go in, you buy a unit or multiple units at a certain price. The difference is, rather than it being a company, it's a fund, and that fund then uses that money to go and buy whatever the fund holds. So you might have a fund that holds gold, and whenever you buy units in it, it uses your money to go and buy more gold. Or it might be a fund that holds a whole bunch of energy companies, and when you put money in, it then uses that money to go and buy a bit of a whole bunch of energy companies. And so for an investor, rather than just buying one company and backing one company in, it's a good way to get exposure to a variety of companies, or something like gold, or potentially something like real estate. It opens up the options that are available to you as an investor.
Yeah, nice one, Ren. Now, to put this in action, if you go to the Stake website and go to their shop, which is where you're going to be placing all of your trades, you can tick two boxes. One is stocks, one is ETFs. If you untick stocks, for example, it's going to display all of the ETFs that they have on their website. And a great thing to do is go into that, click on one and see what it's all about. And you'll start to get an understanding of what components go into these ETFs. For example, there's one here, which is the S&P 500. And it is an ETF that just tracks all 500 stocks in the S&P 500, and you can invest in that.
Which, for those who are unfamiliar, the S&P 500 is the biggest 500 companies in America.
Yes, so yeah, exactly. And then if you want to have a look at the individual stocks that you can buy through Stake, untick the ETF box, click on stocks, and you'll see all of the stocks that are available on Stake. One of the other great things is that you can filter via lifestyle, strategy, industry, and this is something that we will jump into in the next episode. I think one other thing I want to mention with ETFs, Ren, is when you were talking in Finding Inspiration and also in 6 Tips to Succeed, you were talking about looking what's going to happen in the next sort of 6 weeks. ETFs are a great way to get exposure to that sort of stuff, like, as you said, oil or gold or whatever it may be, which you can search very easily through Stake. So I hope by now you know the difference between a stock and an ETF.
Yeah, now I did say I was going to go off script a little bit and throw in a third option there. If you're already overwhelmed, don't worry too much about this, but there is one last option that you can invest in through Stake in this competition or in general, and that is a listed investment company. And they are companies, but their whole purpose is to invest money. So essentially what you do is you buy a share in that listed investment company, they take the money, and then they go and trade and invest and try and make money from the market for you. So they're a company whose business is investing. So that's the third option. You can buy a stock directly, you could buy an ETF, or you could give your money to a professional investor and back them in to invest on your behalf.
Nice, Ren. Talk tomorrow.
Equity Mates and the people appearing in this program may have positions in the companies mentioned. This is general advice only. Please speak to a financial professional to understand how it may pertain to your individual situation.
Equity line.